Hey traders, Akil Stokes here, and welcome to another episode of the Trading Blog. It is an FOMC day. It's Wednesday, February 22nd, and we have the Fed minutes coming out in a little over an hour, so we should see some action in the market. If I had to guess one way or the other, I would say dollar strength. I think that's what the bias is. It's kind of, hey, perform well off positive dollar news, kind of reject any negative dollar news, but, you know, that's why I don't trade fundamentals. So I'll be sitting back with my popcorn popped, taking in the fireworks show. As far as trading goes, trading has been good. It's been a pretty decent week, mainly because I had a few trades that had the second targets hit. Recently, target twos haven't been performing at the level that I expect them to. And this really goes back to a couple of years now. The low volatility, the lack of volatility in the market is really making it difficult to see those follow through targets. And I know some of you are saying, well, how is the market not volatile? It's been moving all over the place, and it really hasn't. It's been really stagnant for the majority of the time. It only moves on these weird type of news events. Like, you know, this morning we had a news event come out that one of the French, I guess one of the French president-elects, or not president-elects, but one of the person that is running for the French election just pulled out, and the market just went crazy. Yen pairs went crazy, Euro pairs went crazy. And it's like, really? Stuff like that? It's funny. Where I was actually, I follow a few other professional traders on Twitter, and I go to Twitter to get my news, my quick hit news before articles get written so I can hear it right away. And then we're sitting there trying to figure out what's going on, and I'm seeing these other professional traders as well saying, really? What's happening? And it's like, it's just ridiculous how the markets have been really the last year or so, but that's why it's survival of the fittest. The best traders adapt and find a way to stay consistently profitable no matter what the conditions are. I actually have a pretty cool video recording from our live room about that. I don't think I'm gonna share it today, but I may share it at a later point. What I did want to share with you today is some different recorded footage from my live trading room today, talking about risk and how much should I risk? Am I risking too much? Am I risking too little? And sort of the differences that, I guess the differences from the professional mindset when it comes to trading to the trader that looks at their trading as just being a hobby. So I'll throw it in there, and I'll see you guys tomorrow with another episode of the Trading Blog. Traders that are trading for like a hobby and traders that are trading professionally. And again, the question is, what percentage of your account do people normally risk? Are there any issues with someone trading 7% of your account on a consistently profitable strategy? And a lot of traders that are trading for a hobby, their goal is to optimize their results. So their only intention is to maximize performance. How can I make as much money as possible? And that seems like a really good idea, right? That seems like a really good idea. However, with a lot of professional traders, the approach is the opposite. It's how can I ensure that I never go broke? So on one side, it's how can I make as much profit as possible? The other side is how can I conserve as much profit as possible? So if you have, 7% is a lot. Typically, you'll hear like the ceiling be 3% per trade. That's like the absolute ceiling across the industry is what usually thought of, 3%. So 7% is basically you're doubling that. Now it does vary. It's going to vary depending on you as a trader and your performance. If you're a trader that if you know you're a 90% trader, if you're a 90% trader, you hit 9 out of every 10 trades and your losses are very, very small, you can easily afford to risk more because you know you don't lose that often. So the chances of risk are very, very, very slim. If you're a 40% trader where you win only 4 out of every 10 trades, right? You probably don't want to risk as much because you're taking a lot more losses than the 90% trader. What you want to be careful for, and here's what I would do if you're going to risk the 7%, you just want to go back through your back testing results, your previous historical results, and just find your biggest drawdown, find your biggest period of drawdown, and see what risking 7% per trade, see how that affected your account during your worst. Basically, your biggest drawdown that's the worst you've ever traded. See how it affected you during your worst and see if see if there was any chance of you blowing an account. Because I tell you what, most traders that risk a lot like that, per trade, 7%, when things are going really, really good, right? They're on fire, right? They got a good week, a good month, a good quarter, right? A good stretch. But typically, as soon as they hit one major drawdown, it wipes everything out. And now months and some point, it's sad, but sometimes years of hard work is all down the drain because of one drawdown. And you got to ask yourself, it's like, it's like building, again, trading is your business. You're building a business. You spent years and years and years building your business. Are you going to put yourself in a position where one little bad stretch can knock down everything you built? Or are you going to put yourself in a position where, hey, if you have a bad stretch, it may hurt a little bit, but in the bigger scheme of things, it's never going to be damaging at all. And that's the decision that you guys have to make as traders. As far as your risk. Again, you risk a lot per trade. When you're doing well, you're going to make a massive amount of money, right? You're going to see you see it online, people making 100% a month, something like that. However, you stop hearing from those people once they hit their biggest drawdown because they're risking so much to make a lot when things are good. They typically blow it all when things are bad. And you blow your account once, you're at zero. You have no chips. You get no chair at the table. You can no longer play the game. You guys follow me on that? So you got to ask yourself, yeah. And it's a tough question. And the mindset usually switches the more serious. Again, the more serious you get with trading. When trading is a hobby, it's good, right? Because you got a full-time job, right? You're just trading for whatever. If you lose it, it's not that big of a deal. Kind of like demo money, right? When you get to the point where you're trading either full-time, like when your mortgage, right, your car note, your kids and wife and you need to get fed based off your trading results, is kind of one I like to call it. You eat what you kill. That's the type of industry you're in, right? If you're trading full time, I eat what I kill, right? If I don't kill, I don't eat. Right? When you're in that type of situation, the main goal is not to go broke. Because I can survive bad months. I can survive months where I don't make a good amount of money. I can survive months where I'm in drawdown, right? I can't survive a blown account, right? Because if I have a blown account and I can't trade anymore, I have no way to provide for my family. At least through trading, I should say. And now you're in trouble. As long as you have the ability to trade, I know that I will dig myself out of a drawdown. I'll dig myself out of a bad stretch. I will get profitable again, and I can provide my family with income. And that's a different, and same thing for people like if you're managing like your IRA or managing like a retirement account. It's a much different story when you're saying, okay, well, I'm managing this account, so when I retire in 10, 20 years, I have a nice little nest egg to sit on. Now, what's the main goal? Is it to make my retirement account as large as possible? Is that worth blowing it all and having nothing and having to work my full-time job another 30 years to make up for it? That's the other mindset. And everyone's different. I can't tell you guys how to think. I can tell you this, it's a lot. What you hear out there on the internet and even sometimes on TV, probably not as much on TV, that's not the reality of what's going on. That's not the reality. The reality is this is a game of survival. It's not a game of making a lot of money really, really quick. It's not a game of an overnight millionaire. This is a game of you come into work every day, you strap up your boots, and you try to survive. You try to live. And hopefully you try to live and make some money out of it. But there are no visions of this being a get-rich-quick scheme. Not at all. It could be a sustainable business, yes. But a get-rich-quick scheme, I gave up those dreams a long time ago.